We are in La Vista, Nebraska at the Certified Angus Beef Feeding Quality Forum, joined now by Dan Basse, who is president of AgResource Company. And Dan, you kind of gave that outlook on not only proteins, but some of the feedstuffs and everything. And you kind of started out with the big picture of looking at the ag economy. And all indications are 2015 is going to be one that people will not want to put in the record books.
No, it really isn't, Ken. Even though farm revenue will be at fourth highest on record, it's down about 9% from last year. As we start thinking about net farm revenue, though, that's going to be down at one of its biggest drops since 1931. So it's been a long time. Unfortunately, for many balance sheets for the farmer, it's not going to look as good this year as it has in prior years.
Now you're talking with beef producers here. Boy, the beef sector, we're seeing some expansion, but a little softness in the market, but overall, things are still clicking along pretty good.
Yeah, the beef sector is one that's going to hold in together. We believe there'll be a final rally into the October-November timeframe on tightening Fed supplies. We think maybe cash cattle can make it back to 157 to 162, somewhere in that range. Longer term, however, because we're in this expansionary phase and because we have all this poultry and pork, it's a little different landscape. We think that beef prices will slowly erode. I, again, would use the word slowly. But the cow-calf man will continue to perform relatively well. With cheap grain prices, people will be looking for animals to walk that grain off the farm.
Well, as we look at this expansion, there's still a concern out there as we get those cold storage reports. We have a lot of protein in the freezer.
We have a lot of record amounts of pork and poultry. Beef stocks are rising. USDA is suggesting that U.S. consumers will be consuming more meat this year for the first time, I would say, going back to 2009. That's a good thing. But we would like to see real movement out of the freezer before that to be confirmed. And so we're a little wary here. Also, as the U.S. dollar strengthens, it's hard to get our export trade really back in line. So at the moment, that's why I said I'm a little concerned about the beef market. Once we get beyond the first quarter of 16, I believe that producers should be looking at locking down margins, using futures as a risk management tool, and doing things that can help them as they look at their profitability for 2 to 3 years out.
As we do this interview, we're in the middle part of August. Crop conditions seem to be looking pretty well. We know there's some areas in the Eastern Corn Belt that really are struggling. Soybeans in Missouri also being a problem. So throw all that together, we're still going to have, all indications are strong carryover and still lots of grain.
Yeah, we are still going to end up by our work as a company, and we're thinking about a U.S. corn yield somewhere between 166 and 170, a soybean yield of 46 to 47.5. That still gives us a big crop. And what I'm amazed about is even with all the flooding we had in Indiana, Ohio, and Illinois, and Missouri, we are still able to get this kind of yield. If we ever had a good growing season, our modeling would suggest that U.S. could use a corn yield somewhere north of 176 and a soybean yield north of 48. Technology is really working wonders in the field, and so we need to be aware of that as we go forward. Unfortunately, that means too much grain and lower prices.
Okay, let's look at the big picture. What's been in the news, and people have kind of played on both sides, is the possibility of an El Nino followed quickly by a La Nina. Is that something you're concerned about?
Well, it's something we're watched, but I also would tell people let's not be so myopic and just focusing in the equatorial Pacific. The Atlantic is an equally important player. If it stays cool, the chances of a drought next year aren't really very strong. So, again, it's long-range weather. Let's try to take it day by day, week by week, but at the moment, we're not overly concerned by dryness next year. And, in fact, with El Nino, we think the plains could do pretty well with rainfall this winter.
Another issue is China and their currency situation, and seemingly when they're in the market, when they're out of the market, if they don't like the position, they devalue their currency. But the U.S. is still beholden to what China wants, correct?
Yeah, pretty much. With biofuels not a driver, we're all hoping that the Chinese step forward and are much larger agricultural importers. Unfortunately, the Chinese just have too much grain. They're plugged with oil seeds momentarily, so it looks like the Chinese will be slower importers in the days to come. This, to us anyway, means that we lack that demand driver globally speaking. Europe and Russia have too much grain, so we just don't know where to turn to get rid of some of this stuff, and that's the problems the markets will have.
You talked with the cattle producers, the outlook, the cow-calf guys. We continue to see this expansion, and I guess so the cycle has turned. We're going to now be in expansion mode for the next few years?
We will be. We are in expansion mode for at least the next 3 years as we see it. Cheap grain prices should help that. We think that more land will come out of cultivation and move to pastures. We think ultimately that this will lead to lower beef prices, but it's a process. As we take she animals out of the supply, that means less beef and keeps the beef market well supported, at least compared to pork and poultry.
As we look, we talked briefly about the outlook for the economy not only this year, but long term. We have the average age farmer is over 65. We are having that new crop, that generational change is happening, but a lot of those young generational farmers have been in 10 years or less, have experienced the good times. And relatively speaking, they probably think they're still there, but input costs are so much more. So where do you think we might be heading in this ag sector? Are we looking at maybe what we saw in the 80s, but maybe a light version, if you will?
Yeah, we don't have the leverage that we had in the 1980s, so it will be a slow burn, if I can use that word, on some people's balance sheets. We won't be looking at the profits that we've had, and generally it's the backside of this agricultural sector. If you're highly leveraged and you're young, it's going to be a tough period. If you've been mature and you own your land, you're going to make through it okay. But you got to be aware of what the risk management tools are out there, revenue insurance, the markets, and all those kind of things. But unfortunately, we don't have that kind of supply lever to pull anymore that can take grains out of production. The market's going to have to do that job. We have revenue insurance, but revenue insurance doesn't take the less supply or less land off.
All right, Dan, you're in Chicago every day. Keep an eye on these markets. If folks want to talk more about these issues or kind of get your thoughts on how things are, how can they get a hold of you?
Well, the best way to do it is always at our website at agresource.com, and we've got videos, lots of information, and things they can take a look at there, Ken.
All right, Dan, thanks a lot.
Take care. You too.
Dan Basse, who is the president of AgResource Company, has joined us.